Well, to help more Americans become homeowners, President Trump is backing a revolutionary yet controversial plan, a 50-year mortgage. It's the biggest potential housing reform since FDR's 30-year loan. So the plan promises lower monthly payments for young buyers who may be struggling to purchase a home in today's market. Supporters like the director of the Federal Housing Finance Agency says this is a game changer, while critics like Moody's chief economist Mark Zandi view this plan as a setup for failure, warning that it will keep Americans in debt for a longer amount of time while the banks profit. So to discuss this, let's bring in our panel, Senior Fellow Unleash Prosperity and Chief Economist of Heritage Foundation, EJ Antoni. Also with us, the host of Wise Guys on Newsmax, John Tabacco. JT, great to see you. The 50-year mortgage, do you think that this is viable, a successful concept, or do you see this as an economic failure for Americans? EJ, I want to start with you. What do you think?
Well, I think the folks who came up with this idea, their hearts are definitely in the right place, right? They want to make homes more affordable. They want young people to be able to get into homes and not have to wait until they're 40 years old, which is the median age of first-time home buyers today. They don't want people to have to wait to start families, et cetera. So I get that. The problem is this isn't the way to do it. What this does is it basically adds on an extra 20 years of interest payments onto a 30-year mortgage. You become like a perpetual renter. And for those folks who, like many, are only in a home about 12 or 15 years before they sell and move, that creates a whole nother group of difficulties because you don't have any equity built up. You've spent those first 12 or 15 years making almost exclusively payments to interest with virtually nothing going to principal. So again, it doesn't give you that chance to build equity and to move. So for that and a whole host of other reasons, it's just not the best way to address the affordability crisis, which is very real.
JT, just run the numbers here. $350,000, 6% loan, a traditional 30-year loan would be around $2,000 a month. A 50-year on the same terms would drop it by about $256 a month, but an additional $350,000 in interest over the life of the loan. Do you think that this is a good idea? Why would young people want to get into something like this?
Well, look, I'm not the esteemed economist that EJ is, but what I'm hearing on the ground, they're on two fronts. One, here in New York City, I'm hearing more and more of this, but the International Bank of China is giving people 90-year loans. So we got to keep up with China on that one front. On the other front, I would say, look, the reason we want people to get home ownership and make the biggest investment of their life is so they can build equity and continue to sell that house and buy a little better house. So in my view, I think the 50-year mortgage brings in a new batch of buyers. And when you ask about young people, well, young people have lots of time to build up that equity. So if they can get into the house at an affordable rate to their salary, then they can start building equity. And by the way, note to those thinking about it, you're paying all that interest right now, you're not writing it off. And if you start paying all that interest, then you're going to get a tax deduction for the interest paid. So the money in your pocket will be a little more each month or at the end of the year, however you file. So I think there are some benefits to it. I think Bill Pulte's doing a darn good job, and this could be helpful.
Yeah, I wonder too, I mean, if down payment is a big problem for young people. You know, you got to come up with so much, the house prices go up. A lot of people might not be able to afford that down payment to get into the loan, a 50-year loan. But let's switch gears real quick. Let's talk 401ks. In an article published here by USA Today, it states that the top earners are saving more for retirement while everyone else is saving less. EJ, to you, excuse me, what do you think is the main issue here?
Well, the cost of living. I mean, look, at the end of the day, what we saw under the Biden administration was this huge increase in the cost of living that was not matched by an increase in people's earnings. In other words, people had too much month left at the end of the money. They were not able to save, and that meant they weren't able to contribute as much to retirement. In fact, we saw hardship withdrawals out of 401ks, for example, set new records under the Biden administration. Now, today, has the cost of living gone down? No, but fortunately, incomes have gone up relative to the cost of living. So that has provided some relief